Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock with news recession warnings are piling up. This morning, Wall Street is flashing red lights. Equity markets are spooked by bond markets, which say a US recession is coming. The S&P 500 is down 2.8%, meaning the drop in August so far is 4.5%. The closely watched 3-month 10-year US Treasury bond curve is now remarkably inverted at minus 37 basis points. The 2-10 curve is flat and about to invert too, and that'll be its first in 12 years. These are serious signals. Late in European sessions after Wall Street had opened, they too fell sharply, ending down more than 2%. The triggers are weak data in both Germany and China. Both have been caused by capricious US tariff policy. This is a pure Trump recession. US import prices rose in July from June, even if they are lower year on year. It was an uptick that wasn't expected. The recent US moves to save Christmas and the higher prices consumers will pay for the latest US tariffs isn't bringing any similar concessions from China. If anything, they're hardening their stance. China is not only dealing with US trade war and unrest in Hong Kong, its economy is slowing faster now too. Industrial production data has posted its worst growth since 2002, up only 4.8% in the year to July. Analysts had expected this to rise 6%, down from the 6.3% in June. This is a fast decline. And that wasn't the only sharply negative data. Retail sales rose only 7.6% in July from a year ago, and way below the 8.6% expected, and the rise in June of 9.8%. At least the Chinese aren't gilding this data, but they are preventing the yuan from sliding too fast. German GDP actually fell in the second quarter of 2019 from the first quarter and shows zero growth from the same quarter a year ago. EU GDP rose 1.1% in the second quarter of 2019, a slightly slower growth rate than the first quarter, and that's the slowest growth rate since 2014. US Treasury 10-year yield has slumped 9 basis points today to be just on 1.58%. Their 2-10 curve is now completely flat, and their negative 1.5 curve is wide at 30 basis points. The widely watched 3-month 10-year curve has ballooned out to a negative 37 basis points. Gold has jumped $13 today to $1,514 an ounce. US oil prices have dropped sharply today too, giving up yesterday's bump, and now just on $55 a barrel and falling. The Brent benchmark is now at $59 a barrel. The Kiwi dollar is weaker again today at 64.3 US cents following China down. On the cross rates, we're up against the Aussie to 95.3 Aussie cents. Against the euro, we're unchanged at 57.7 euro cents. That puts the TWI at just on 69.7. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.